My presentation. I'm Vinay Kumar C, Assistant Professor, Department of Commerce, Sri Venkataramana Swamy College, Bandipal. Good morning, students. Today we are going to discuss the topic related to depreciation accounting. As usually, we learned a few things about professional accounting in earlier classes, and we have done some theory. We have learned some theory and as well as some practical problems towards professional accounting. That professional accounting is also important for the purpose of examination, and also today we are going to discuss the depreciation accounting. It is also an important topic which you may expect in your examination for 22 marks and as well as 10 marks. This chapter, it includes a 10 marks question or 5 marks question or 22 marks questions. Okay. As per the student's point of view, the theory and as well as the problem towards the depreciation accounting is too easy. So come to the point of this topic. As usually, you all are familiar with asset. So what are the different types of asset which is used in an organization? In an organization, they are using different types of assets. The assets like fixed assets, fictitious assets, current assets, etc. As per this topic, the fixed assets is too important because we are, as an accountant, we are calculating a depreciation on fixed assets, right? Usually, the organizations are established for an indefinite period, okay, and also therefore requires both current assets and as well as fixed assets. Example: cash, stock, debtors, closing stock, bank. They are come under current asset, whereas machinery, building, furniture, equipment, these are things they are comes under fixed assets. So fixed assets are consistently used in business. Their value comes down gradually, right? The fixed assets are used in the business to derive benefits for more than one accounting period. So an appropriated portion of the fixed assets are used to generate a periodic revenue and needs to be charged as cost. Such an appropriate portion of the cost on fixed assets is termed as depreciation. So this is the statement we are taken under this heading. So depreciation means a decrease in the value of an asset like fixed assets. So this decrease in the value is termed as depreciation in accounting. So this is a procedure which is followed under organization for the purpose of buying a new equipment or new fixed assets in next years. And for example, an asset which is used for 10 years. Okay, after 10 years we are going to buy a new assets. For immediate you are buying a new assets, you require money. So where you are going to get those money? So that is the purpose. We are going to deduct the money in every year as a depreciation. Okay, that amount will be kept for long period and then we go on by the new fixed assets. That is the procedure it is followed in an organization. Anyway, this is depreciation accounting. It is too helpful for an organization. Some of the experts or some of the authors, they define a depreciation as like this. For example, Pickles is the person who says that a depreciation is the permanent and continuous diminution in the quality, quantity or the value of an asset. So is directly and as well as indirectly is telling that any asset, it is in the form of fixed asset, their value will be decreased for a long period. When you are using that asset for a long period, automatically the value will be decreased. Not only value, even the quality and as well as the quantity of the assets will be decreased. So that is what this person Pickles is saying. And Spicer and Pegler, the other authors, they are also telling that the measure of the exhaustion of the effective life of an asset from any cause during a given period. There are some causes of depreciation, even though it may be a wear and tear, or even though it may be a time period. So the reason may be a different. Okay, any one reason, the asset value, the quality of the asset will be fixed asset will be exhausted. So that's why it is called as a depreciation. Even though R.G. Williams also defines a gradual deterioration in the value of an asset due to use. So this is common because any asset we are using, that assets will be the assets value will be decreased. For example, today you are buying a car, okay, a new car you are buying, is it the same will be in after 5 years? No, the value of that car will be decreased. Today you are buying the vehicle for rupees 10,000, 10 lakh rupee, but in after 5 years the value will be decreased for 5 lakh rupees, and then after another 5 years the value comes down to 50,000. So what is the reason? The reason may be using when any fixed asset, when you are using, the quality of that product will be decreasing. So that is the reason. So for that reason, the organization or the accountant, uh, they are using this type of accounting practice towards these fixed assets. So come back to the causes of depreciation. What the Spicer and Pegler they are telling, due to the several causes. What are those causes? Discuss one by one. The first one is physical wear and tear. Even though you have kept that machinery within an organization or within the room, and even though you are having so much facilities, maybe AC facilities, and daily you are washing that machinery, so everything whatever you are going to do towards that fixed asset, the quality may be decreasing due to wear and tear. So wear and tear means an asset get worn out on account of constant use in the business. There is a reduction in the value. When the fixed assets are put to use, the value of such asset may be decreased. Such decrease in the value of asset is said to be due to physical wear and tear. Okay, this is the best example. For example, you are buying a fan. Okay, you are using that fan for a long period, so automatically the quality will be decreased. The maintenance, you require a maintenance, you are not doing any maintenance that for fan, so automatically the it comes to a repair. Okay, so this is common. You cannot say that the product should not be used. Okay, so generally when we are using any type of fixed assets, physically the wear and tear may appear for that fixed asset. Next, exhaustion. Exhaustion, it is another causes of depreciation. Here, through the constant working, the case with mines, oil wells, coal field, etc., an account of continuous extraction of minerals or oil, a stage comes when the mine or oil well gets completely exhausted. So due to the sun rays, okay, the heavy heat, heavy sunrise, okay, it may be evaporated. Okay, the oil may be some type of product. It is also a fixed asset. Okay, that product will be evaporated due to the natural environment. Okay, in an environment, exhaustion is a common. Okay, that exhaustion may appear for your fixed assets also. So that is also the one of the reason. And move on to the next causes, that is obsolescence. Even though in this assets are discarded before they are worn out because of changed conditions. An old machine which is still in working condition may have to be replaced by a new machine because the later being more efficient and economical. The decrease in the value of existing assets on account of availability of superior technology is known as obsolescence. Also, under these causes, the technology is too important for any type of product. Okay, today we are buying a TV. Okay, in earlier days, the TV may be in the form of white and black. Okay, later it comes to a color TV, and then it is moved to the LED. Okay, people they are not interested with the color TV, they go and buy the LED TVs. Okay, the quality of the LED TV, the picture quality of the LED TV is too good, but latest the LCD TVs are comes. Okay, the people shifted to the LCD TV, from LCD to LED TV. Okay, that is the latest development. So even though after the LED TV, today we saw that the curved TV are available. That means technology will be developing day to day. Okay, especially in the electronic goods. So any fixed assets, the practice of using may be changed due to the technological changes. Okay, so that is also the one of the reason of causes of depreciation. For a best example, you saw the typewriter. Okay, in earlier days we are using the typewriter. Earlier days nothing but in last 10 years back we are using typewriter, but today we are not using the typewriter because the computers are available. So we are, with the help of Windows we are going to do a typewriting work. Okay, within a minute you can get it, within 20 minutes, within 15 minutes you can type the letter immediately with the help of these computers. Okay, that is the development towards that thing, towards the typewriter machines. Okay, so that is the best example. So another causes was a flux of time. So there is certain assets lost their value with the passage of time, even though they may not be used. In case of assets like leasehold property, patent, copyright, etc., the value of asset decrease even if it is not used. So this is also the terminology which is used in marketing. So under the marketing we are using the patent, copyrights, etc. Okay, so this patent and copyrights it comes under intellectual property rights. Okay, this intellectual property rights, whatever it is in the form of brand, it is in the form of patent. If you are not using that brand and patent, the value will be decreased in next days. Okay, so that is also the one of the reason. The another causes was accidents. When an asset met with an accident, its value diminish. The assets might depreciate in its value when assets may get involved in an accident. So these accidents, it may be in the form of fire accident or maybe some other type of accidents maybe took place towards your fixed assets. Okay, the value will be decreased. Especially in an organization, commonly we are using machinery, equipments, furniture, etc. Okay, those are the fixed assets. So it may be took place some accident, fire accident maybe took place towards that fixed assets. Okay, that is also the one of the reason the value of the asset will be decreased. Depletion. See, this is also the one of the causes of depreciation. Some assets are of wasting character, perhaps due to the extraction of raw material from them, and natural resources such as mines, quarries, and oil wells result in depletion, thus resulting in decrease in the value of wasting assets over time. So this is the best example which is relates to the petroleum products. So how long we are going to draw the petrol from the well? Okay, so it is a non-renewable resources. Okay, that resource may not be available after 100 years. Okay, after 200 years. Okay, you should use those non-renewable resource scarcely. Okay, so that may be the another reason for causes of depreciation. The last but least, that is fall in marketplace. This is not happens due to the wear and tear or due to the accident, but this happens only the price of the product will be decrease, the price of the fixed assets will be decrease in market. So that is also the one of the reason a continuous fall in market price, the assets may lose its value. Anyway, here we learned a few things towards a causes of depreciation, and also we learned what you mean by depreciation, what are the definitions of depreciation, and what are the causes of depreciation. Comes to the point of accounting treatment. So what is the accounting treatment we are doing under depreciation accounting? See, so there are several methods will be followed towards a depreciation. The first one is straight line method, another one is a diminishing balance method, and then annuity method. Okay, like that we are doing several methods of depreciation. Okay, for the purpose of examination, straight line method and diminishing method is too important. Comes to the point of accounting cycle. So what we are going to do in accounting cycle? What is the first stage in accounting cycle? The first stage is business transaction, the recording of business transaction, right? And then we are move on to have a journal entries, and then posting the journal entries into the ledger, and then we prepare the balance sheet. That is the procedure we are doing in accounting, right? So that is the accounting cycle. So here also, if you want to do an accounting towards a depreciation accounting, first you need to have a business transaction. Okay, so in this chapter the business transaction is like this. The machinery is purchased on 10 December 2020, and 10% of depreciation will be considered. Like that the transaction may be. Okay, see, so one by one. The first one is for purchasing asset. So if you are purchasing any asset, what is the journal entry? The journal entry should be asset account data to bank account. So why it is to bank account? The assets which is purchased for cash. Okay, you directly pay the money, and then you buy the fixed assets. Okay, so you are paying the cash directly. So the journal entry should be asset account data to cash account. If you are not pay the cash immediately, you are taken for credit. Okay, then the entry should be assets account data to suppliers account. So hope you are all listening. The second one is for charging depreciation on asset. So when you are charging the depreciation on asset, what should be the journal entry? Okay, whatever the losses and gain towards any asset, that should be debited. So depreciation account data to asset account. Asset may be in the form of machinery, or it is in the form of equipment, or in the form of furniture. For charging the depreciation to profit and loss account, what is the next stage? The first stage is purchasing the asset, the second stage is charging the depreciation, and third one, transfer those depreciation account to the P&L account. That is the another stage. So if you are transferring those depreciation account to other account, so that account should be debited. So profit and loss account data to depreciation account. So when you are comparing the second journal entry to the third journal entry, so here under the second, the depreciation account is debiting. Okay, that debiting account should be credited if you want to transfer that account to P&L account. So that depreciation account comes to credit side. So profit and loss account comes to debit side. Profit and loss account data to depreciation account. Then another journal entry for sale of assets as a scrap. So when you are using the assets for a continuous period, for a long period, then the value of that assets will be decreased to near to zero. Okay, that assets will be resale. So that resale value should be called as a scrap. Okay, So right, when you are selling those products, the entry should be bank account data to asset account. Last entry for transfer of profit and loss on sale. So profit and loss account data, if it is loss, profit and loss account data to assets account. These are the various journal entries which is followed under depreciation account. In next class we are going to discuss a ledger account and also the method of depreciation. Thank you for watching.